Hey, it's Clay at claycharter.com. This will be my top 10 stocks as we head into Thursday, June 22nd. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple clarifications. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame. I mean, each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, NKLA, showed some signs of life once again this morning. You can see down there, opening 30 minutes, nice little volume surge. And then for the most part, price maintained itself, which has now actually created a good solid little pattern here. And let's get this pattern in play. So you could really start this line from wherever you want. But the idea here is you have this nice little uptrend line. So let me change that to green to represent more so the support dynamic of things. And then on the same token, you have this resistance line right there, which you got to think a lot of people have drawn that one right there. Yeah, this green line, okay, should I have connected that one and that one? You know, there's a little bit debate, but this one is just very straightforward. That one and that one. And when straightforward lines can be drawn, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements because you got to think that a lot of people are watching that line. So while nothing is guaranteed, is it plausible to think that if the price comes up here and breaks up through that level, that break in and of itself could create additional buying pressure? Absolutely. So if you like to play potential breakouts, you like stocks down below $2, keep an eye on it. Next, MARA did this analysis yesterday, and the beast move continues. So let's map out some new levels. So the first level here that, again, we can call this one of these self-fulfilling prophecy levels because you got to think that everybody, there's brother, is uncle. Notice that right up here, give or take by a few pennies, $12.80 has proven to be quite the stubborn level. So again, no guarantees, but is it plausible to think that if the price curls back up, gets to that level and then breaks through it, that break could create additional buying pressure? Again, that is certainly a plausible outcome. In terms of levels of support, I think two main levels stand out. Maybe we can even just call this a support zone, but top of the support zone right there at the $12 mark, and then the bottom of the support zone down here at that gap close location of $11.25. So basically a 25-cent support zone right around here. So if you're someone that likes more so pullbacks, then that's definitely the location of the chart that I'd keep an eye on. And again, if you like breakouts, then definitely keep an eye on that level up there around 1280. Next one, MULN, and this one was looking basically left for dead, and I didn't think I'd be back to this one so quickly, but you got to give credit where credit's due. Things were looking very rough, but now another bounce is underway. Now, once again, we have the same dynamic here. There's a nice little bounce, but right here, that bounce proved just to be a total dead cat bounce as it rolled back over. Does that mean that this one will roll back over? Of course not. There are no guarantees. But does it mean that this thing's going to continue on up? Of course not. There are no guarantees. But the fact of the matter is, this is a worthwhile move, and that's what watch lists are all about, finding unique, finding interesting situations, and not rushing out and randomly buying stuff, but watching it. So if you like to play this price range penny stocks, and you like to play these situations where maybe this is the start of a new bounce in the upwards direction, then I definitely keep an eye here on MULN. Next one here, AHI, and there's no doubt about it. This is a pretty ugly looking chart. Fantastic opening 30 minutes, don't get me wrong, but after that, basically just straight down. But as you longer time viewers have heard me say time and time again, there can be opportunity in the ugly. So yes, it's ugly now, but within that, could there potentially be some reversal areas? And if we go back to the history of the chart, at least for me, a very interesting level is right down here on this gap close location, give or take around the $1.20 mark. And along with that is you have that purple line not too far off. So, going back to the whole talking point of support zones, you have a general support zone right here. Now, I wish I could say trading was this easy and this thing will for sure come down here, find buyers, and then bounce. But there are no guarantees. That's why risk management matters because there's, it's not going to for sure bounce. But does it become a logical area where it could bounce? In my mind, absolutely. So if you like to play these scenarios where things are, without doubt, looking pretty ugly, looking pretty, almost like, is there any hope? Was this just some sort of nasty fake move to the upside and everybody starts to get out, wave the white flag, and then at those moments are when things turn around? If you like those sorts of potential scenarios, definitely keep an eye on it. Next one here, AMC, and not a whole lot to report here. Now, overall, good to see that the bulls held strong. For those of you that watched this video, hopefully you remember me talking about right there, $4.50 as that key level of support. And earlier on in the day, price came down there, got a nice bounce from it. So anybody that watched yesterday's video and took advantage of that bounce, congratulations to you. But that's just more so from a trading standpoint, taking a step back. Like I said, nothing great today happened, but also nothing bad happened. It just simply continued to go sideways here, which makes it more realistic to throw out there, okay, maybe, just maybe this is some sort of bottom that's finally forming. Now, I wish I could say that just because it's gone sideways essentially 2 days in a row, that this is for sure guaranteed to be the bottom. But, does it become a little bit more plausible right now? Sure. If the price was just dropping straight down and I'm saying, oh, it's looking like that's the bottom, you could be totally justified to say, what are you talking about? Based on what? The price is literally dropping. But that's not the case here. It is going sideways. Guaranteed bottom? No. Plausible bottom? Sure. Real quick, want to personally invite you to get signed up for this free live class that I'll be offering here in just a day actually. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box, or if you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then definitely get signed up for the free class. Next one, UCAR. Beautiful, beautiful move today and a beautiful pattern, which brings us to the talking point of self-fulfilling prophecy. So as I draw this pattern in play, as I said before, I'm not trying to impress you, not trying to imply this is a great discovery on my part. A lot of people have noticed this pattern, so let me change that to green to represent support, and then keep it one color here to make it easier to see, hopefully. So we have our resistance, we have our support, we have the huge explosion right here. For you golfers, we'll put a little golf down here to make it more visual. This would be known as a bull pennant pattern. So if you like bull pennants, if you like stocks down below $10, keep an eye on it, because if this thing can come up to the top of that pennant and get the breakout, very valid to think that a lot of potential breakout players who like to play those patterns could very well be watching it. Next one here, TSLA Tesla, and it actually finally behaved in a human way today with a pullback. Now, this is a relatively tricky chart to talk about from where I sit from a presentation standpoint, because is this a good or bad looking chart? Well, it depends. What do I mean? Well, if you're some sort of day trader, flipper, scalper, whatever you want to call yourself, and you bought right there and your plan was to buy and sell within 15 minutes, well, then from that perspective, yeah, the chart looks really, really bad for you. With that being said, even with the big pullback here, if I squeeze things up, you can still see that from the overarching standpoint, the price is still very clearly in an upwards trend. The one thing that I would note is that the price is now actually down below that purple line there, which has not been the case here for several weeks. I mean, the last time the price was actually down below that level, you can see back here in May. So it's been a long time since the price been down around that level. Does that mean that this pullback is going to get more violent? No, that doesn't necessarily mean that. But it does mean that, okay, maybe this pullback is actually going to get deeper than some of these past pullbacks, but that, of course, remains to be seen. But that would be the one dynamic here where I'd say, this is not exactly the same as other pullbacks because, like I said, the price has now closed down below that level. So if this pullback does continue a bit more, the next key area of support to keep an eye on would be down there right around the $255 mark. If there is any sort of attempted bounce in the very near term, keep a close eye on that 264 mark, as that could provide some potential, or 264.50 could provide some problems there. But like I said, assuming you do care about the big picture of things, everything is still perfectly fine. Next one here, AMD, and the downtrend continues with this one. In fact, picked up a little bit more momentum here. So yeah, things are looking rough right now. Going to go ahead and get rid of that line as it served its purpose for now. That support really didn't stand at all. And as far as resistances are concerned, I've had this line in play for quite a while, and I want to leave it in play because at some point in the future, I really do believe that this level is going to play a role for a quality trade plan that you could use. So I'm going to keep that level in play right there. Now, in the very, very near term, as far as areas of resistance are concerned, keep a close eye on that 114.50 mark. You can see that was basically the top part of this little miniature channel that formed right here. What about next potential areas of support? So if the pullback continues, well, as of now, the price, no guarantees, but seemingly should at least go down to the 111 mark. To be more specific, maybe 110.75, because that would be the gap close location. Whoop, you can't even see that because it's behind my ugly mug. So let me adjust that. There you go. Which would be the gap close location right there. Now, do gaps have to close? No, nothing has to happen. But that would be a level that at this point, like I said, seems pretty reasonable that the price could go down to. If that level does not quite hold up, then the next level of support after that would then be down there right around the 109 mark. But yeah, as of now, sellers have definitely shown back up here for AMD. Next one, PLTR. And like a lot of these other tech stocks, rough day today. And what makes this interesting now is it is approaching what I would say is a pretty well-observed level down here around $14.30. Going through the history of things, you can see acted as support a couple times there, generally speaking right there, and almost hit it right there. So that'll be a level that, again, you got to think a lot of people are watching. From the overarching standpoint, you do have this area of resistance up here, sure, but on more of a near-term level, I would definitely consider that 200-period moving average now a key level of resistance, and that's just based around the foundational rule that when levels of support are broken, they tend to act as resistance. So keep an eye on that. That currently is valued at, we'll call it 1535. In terms of if that level here does not hold up, then the next key level of support after that then be down right around the 1385 mark. But yeah, sellers showed up in a pretty big way in this one. But still, overall, the trend is upwards. So it's just a question of, how genuinely strong is this? That remains to be seen. Next one, TQQQ, which is an ETF that measures the NASDAQ. So if you believe the NASDAQ market is going to rise, this one will also rise. Biggest difference here is it just allows you access at a much lower price point, which makes it a very popular ETF. So first dynamic here that actually played out perfectly. So a classic example here of charts. In fact, let me just get rid of that level. But as I just stated, when levels of support are broken and closed below, they tend to act as resistance. And as you see here, that is exactly what played out here. So this was a level of support that I talked about previously, but opening 30 minutes, price broke down below it, tried to bounce back up, rejected not only once, but twice at that level. Now, does that mean that this level right here can never, ever be broken again? I'm not saying that. I'm just saying it makes sense why the price did struggle at that level. So first initial area of resistance on any sort of bounce, 39.65. And then that would be followed by that purple line there, 50-period moving average up there right around, we'll just call it $40.50. In terms of levels of support, two main levels stand out. First level right here at 38.50, and the next level not that far away, you have that pink line, which is the 200-period moving average valued at 37.85. And just given the fact that this thing's made such a big move up, I think both these levels are very much so in play. As you know, this pullback here, I think probably has a little bit more energy left in it. So we'll see what happens with it. But technically speaking, these are definitely the levels that I'd keep an eye on to potentially build some trade plans around. So that wraps up the top 10 list. Again, if you like what you saw here and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then get signed up for the free class. It'll be Thursday, very soon, June 22nd at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these and if you would like for me to continue to make these top 10 videos, please help me out by communicating that in two ways. Hit the like button and leave a basic comment. Say hi. Give me a smiley face emoji. Tell me what you're traded today. Tell me what you're watching tomorrow. But those two things communicate to me that you're enjoying. And as long as I know you're enjoying, I will continue to put in the time and effort to get these videos out to you. So go get signed up for that free class. Hit that like button. Leave a comment below. Thanks for watching.